Fed Chairman Jerome Powell announced a major policy shift to average inflation targeting that could keep interest rates lower for longer. This is the IG Trading Talk, and I'm Manuel Koch. And joining me now are Salah-Eddine Bouhmidi, he's the head of markets at IG, and the legendary Einstein of Wall Street, Peter Tuchman. Guys, so good to see you.
Thanks for having us. Good morning, everyone.
Peter, just because everyone can see that you look different, can you give us a tiny hint what you have done the last weeks? Because I think you were in hospital and it's all about COVID-19. So maybe just tell us 2 sentences if you are okay.
Absolutely. So, I've been going through the COVID-19 since March, and I've sort of moved my way beyond the virus and the initial symptoms. But unfortunately, I have some collateral damage that has been affecting my cervical spine. And as a result of this virus and inflammation, I've been forced to have a surgery to rebuild the whole cervical spine, which is why I'm talking like this. I'm wearing a brace, and I had a surgery this week, putting in some plates and screws and whatnot. The prognosis is good. It's a long recovery. I will be like this probably for 3 to 4 more months, but I will not be losing a beat with the IG Live, so you'll see me every week.
Peter, so good to see you, and I'm very happy that you are okay. So all the best for you. And maybe let's talk about the markets. The Fed announcement was a big deal. Does it mean that we see low interest rates or even zero interest rates for a long, long time, and that stock markets will only see one direction, they will go up?
I really think it's sort of fascinating. The Fed story, the inflation story, the interest rate story is part of a much bigger picture that I'm willing to bet some of these guys who sit around that Federal Reserve meeting are even scratching their heads wondering, what do we do here, right? You've got an economic shutdown worldwide. You've got a virus and a pandemic across the world. You've got attempts at reopening the markets. You've got stimulus happening all over the world. You've got United States stock market that is literally trading, a moment away from historic record highs, while at the same time we have a record unemployment and we've got interest rates trading near zero. And so what do we do? Where do we put our attention? Where, when a patient comes into a hospital after a crisis, the first thing they do is what they call triage, right? They look and they evaluate the situation from worst to best, what needs to be taken care of first, and how do we preserve the life of this patient. Same thing I think we do here with this economy, but it seems counterintuitive. If we were to look at the economy in a crisis and we say, oh my God, the triage situation is we really need to stop the bleeding and to really give some care to the economy and not the other side. Well, I don't know if we've done that. We've given triage and we've given blood support to the markets, but not necessarily the economy. So then on top of that, the inflation question bears to ask us, what is real, what is not, where do we need to put our attention? If we have a raise in inflation or not, what difference is that going to make? What will it take to get this economy back on track? How much of it's real? How much of it's just numbers? It's really, where do we take our focus? Where we're in an emergency room, we've got problems worldwide. Where do we put our attention?
Yeah, good point, Peter. One actually general thing in the entire world, actually, who is benefiting from the markets right now? It's the small portion of maybe 1-2% in the world, and it's not the majority of of people, of students who are paying their loans, student loans or whatever. It's just this 2%. They are still, winning and profiting, of course. I mean, if we looked on seasonal patterns, for example, August, September are really weak, actually, but in historical manner. But if we look on the S&P 500 in August, we made 7% performance. And what I want to say is, even if September is a really bearish month, actually, historically, do you think that the market will still rise, or do we compensate this huge, significant momentum that we can see right now?
So I find it fascinating, and I think one of the great things about you and me and our partner in Germany at Inside Wirtschaft, and IG, we try to understand why the market does what it does, and why the market is, every time we're seeing a bit of a pullback and a pause in the market, it's really been nothing more than just a pause before a huge, once again, a rally. That's why I started off the commentary saying, I'm not sure the Fed really knows what to say or what to do, right? Where is our attention going here, right? At the end of the day, I always joke and say the market's doing what it wants to do. The market tells us what it thinks.
Salah and Peter, what do you think about the weak US dollar? What does that mean?
We can see that the dollar is weak. But one thing that is in the back door, what I think is what is driving this weak dollar is, if you look on emerging markets, for example, Turkey, they have a lot of reserves in dollars, of course, to keep up their currency and to keep up their economy, which does, with a lot of emerging markets, do so. And what we can see, for example, in Turkey, is that 46% of their dollar reserves are already sold in this year due to Corona, due to COVID. So this is actually a massive selling pressure which is coming from emerging markets and not from our daily business, what we think is driven by COVID as well. So I think there is not too much focus on emerging markets or emerging market countries like Turkey, Brazil, Russia, and so on, that maybe are bringing a huge effect on this dollar weakness. What about you, Peter? What do you think about this?
The only answer that I feel comfortable with, and we spoke about it a few weeks ago, is when asked, what do I think about the dollar and its weakness? What do I think about the Fed and inflation? What do I think about the markets versus economy? I don't know, and I don't think any of us know, right? We know. I really believe that when you put on a Broadway show, right, and everybody shows up for opening night, and all the costumes are brand new, and the wigs are beautiful, and the makeup is done right, and you get through the show, and it's a hit. It's a smash hit, right? And then at the end of the evening, and everybody closes up shop, and boom, 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 and you stroll through that movie, that theater on Broadway, and everyone's gone home, and there's no sign of all the wonderment and the musicals and the expertise of the musicians and the nice fancy people all dressed up for their evening. Once that's all gone, you're left with a dusty, empty-seated theater. And my fear, in a huge way, is that a lot of what's going on here is a lie of smoke and mirrors in a bigger and bigger way every week, right? I'm not waiting for a shoe to drop, but I'm kind of waiting for a shoe to drop.
Everybody could take a huge lesson in this year. And I would wish I would start from this day, starting trading from a new kind of way, because this is the best year to start trading, actually, to learn about trading. Nobody, even the gurus, even Warren Buffett, doesn't know where the market will go to.
I love that you said that, and I agree with you. It's almost as if what we're seeing now in one day or 1 week or one trading cycle used to take years to happen.
Right.
So if you're a student of markets and you want to try and understand what's going on, there is no better time in history. It's like as if you went. It's as if you you have economics 101. It happens 3 times a week. You have 1 semester, 2 semesters, 3 semesters. All you need to do is throw out all those books and just bring in every day's newspaper and analyze the markets trading on a daily basis. You will have a whole history of knowledge and trading information in 1 week, right? Because what we're seeing happen sometimes in a day, right? You are watching a historic moving average movements.
We have to celebrate a birthday. It's a 90th birthday, and it's not your birthday. It's Warren Buffett's birthday. He was born on August 30th, 1930. Is he like a legend or an icon on Wall Street?
You know what? It's fascinating. I know that there are. I've met him a number of times, and I have to admit that he's a character. He's obviously an incredible, iconic investor. He is a quirky curmudgeon of a man. He still lives in the home he grew up in. He still wears the same shoes he wore in 1947. He doesn't drive around in a Tesla. He doesn't spend more than $16 on a steak dinner. He has hundreds of billions of dollars. He did not buy any stock on March 23rd when the market went down. He eradicated his positions in the airlines. Sometimes, in retrospect, his trades have been extraordinary with foresight. Sometimes his trades have been, it's hard to know really, because, we only hear about his trades after the fact. If you're slinging around a couple $100 billion, well, anybody can look good with $100 billion. But, however, I find it extraordinary, his humility. It's almost surreal in a way for such a, he's like from the Wizard of Oz. He's a very homely country guy. He came from humble beginnings. He's incredibly bright. He's a big thinker. The qualities that make him up are extraordinary.
And Peter, I think we can learn a lot from you as well. Thank you so much, Peter Tuchman, the Einstein of Wall Street, and Salah-Eddine Bouhmidi. He is the head of markets at IG. Guys, appreciate your time.
Thank you, Manuel.
Thank you, Manuel.
And thank you for watching. This was the IG Trading Talk. I'm Manuel Koch, and for more information, go on IG.com. See you next time.